Okay, hello guys. Welcome to our evening live trading section. So this is the section where I'll be showing you guys how you can start making money trading the forex market. Okay. Um, so today, as I've said, we are going to be starting forex trading from the beginning. Okay, from the get go. So I'll be making introduction to forex trading today, introducing you guys, and then preparing you for everything that you need to know before you can actually become a professional forex trader. All right. So let me just write that out. Yeah, it's very important since you have the topic, right? So um, let me just take this out, and then we can have. Okay. So as I've said, we are going to be starting with introduction to the forex trading. Um, so first of all, um, sorry guys, just a moment. Okay. Okay. So as I've said, we are going to be starting with just a moment, guys, please. Just a moment. Okay, sorry guys, sorry for the delay. So, like I was saying, we are going to be making introduction to the forex trading today. Okay. Um, so, okay, so first of all, you need to understand what forex trading is all about. Okay. So forex is all about. Sorry about that, guys. So okay, all right, let's continue. Let's continue. So as I was saying, introduction to forex trading. Okay. So first of all, to start forex trading, you need to understand what forex is all about. Okay, so forex is short for foreign exchange. All right, in case you don't know, forex mean foreign exchange. All right, so you might hear people saying, FX, forex. What they mean is foreign exchange. Now, what is foreign exchange? So to understand what foreign exchange means, um, let's make an example. Okay, so let's use the Nigerian traveling to outside the country as an example. So let's take for example, you are in Nigeria right now. You want to travel out of Nigeria. You want to go to a country like let's say Canada. So you obviously can't spend the Nigerian naira in Canada. It's not possible. Okay. So what you want to do is when you get to the airport, you go to Bureau de Change where you can actually exchange your naira to a Canadian dollar. That is, you are visiting Canada, you obviously want to exchange your naira to Canadian dollar. Yeah. So the process of you exchanging your Nigerian naira to the Canadian dollar is called foreign exchange. Okay, and that is what we mean by forex. So though in this case it's quite different because you are not going to the airport, and this is not something you do manually. All right. So this is something you do online. Okay, and then we have people that actually they are there for this specific process, and then we will be getting to that very soon also. And then talking about forex trading, um, talking about forex trading. So okay, talking about forex trading, you want to know how to make money from forex. Okay, and that is why you are here, because you want to know how you can start making money from the forex trading. So the idea is to predict how a currency price will move. Okay, and then you open a position based on the prediction. So as a forex trader, what we do is we speculate on the movement of the price, what the market is going to do in a certain period of time. All right. If the market is selling, you obviously want to sell. Then if the market is buying, you want to buy with, you want to move with the flow. Okay. So and then talking about forex, we have what we have currency. Okay. So using the example that I've made earlier, I said using the example I've made earlier, I said if you want to jump from Nigeria, sorry, I think I spread the currency. So with the examples I've made earlier, I said if you want to travel out from Nigeria, you need foreign currency. Okay, you need the currency of the country you are visiting. So now, if you have naira and then you are exchanging it to dollar, you see, two currencies are involved for you to be able to trade in the forex market. Okay, two currencies are always involved, and those currencies actually have names also. Okay, So let's assume we have USD CAD. Okay. So USD CAD, that is the United States dollar against the Canadian dollar. Right. So the currencies need to be paired together before they can be traded. All right. So look at these examples here. Look at this. You see, CAD Euro AUD, Euro CAD, Euro CHF, Euro GBP. Okay, so you see, it involves two currencies. For you to trade the forex market, you need two currencies. All right, and then those currencies also have their names also. Okay, they also have their name. The first currency is called the base currency. Okay, while the second currency is known as the quote currency. Okay, so what this means is that the quote currency always have its price just beside it. Okay, the base currency will always have its price just beside it, something like this. Okay, so when you have something like this, you know, a currency with a price beside it, the currency pair. Okay, you know, when currency becomes two, we call it pair. Okay, it is not a currency anymore, it is now a currency pair because it involves two. So when something is two, it is pair, not one. Okay, when they become two, it becomes a pair. So now we have a pair of currency, we have two currencies here, and then at the back we have these figures. So these figures are just for the quote currency, they are for the second currency. Okay, now what this means is that you need this to get one of these. All right, you need 1.2345 Canadian dollar to get one US dollars. All right, I don't know if you guys are following. So that is what that means. Right, that is what it means. The base currency comes first, the quote currency comes second. All right, so if I ask you now, what we have here, Euro CAD. So euro here is the first currency, okay, and then euro is our base currency. While the second currency, CAD, that's the Canadian dollar, is our quote currency. Okay, the first currency is the base currency, while the second currency is the quote currency. All right, in any forex space, that is how it is. The base currency is the first currency, while the second currency is known um as the quote currency. Okay, so now let's move along. Let's move on. Still talking about currencies, we have major currency. All right, we have major currencies. So major currencies, uh they are comprised of 8 currencies. Okay, we have the USD, this which is the United States dollars. We have euro. We have GBP, which is the Great British Pounds. We have JPY. We have CAD, Canadian dollar. NZD, New Zealand dollar. CHF, and then AUD, Australian dollar. Okay, so let me just list that out. Let me list it out. Right. So these are the major currencies we have in forex markets. See, these are the major currencies: USD, Euro, GBP, JPY, CAD, NZD, CHF, and AUD. Okay, and then talking about major currencies, when these major currencies are paired with the USD, okay, so USD is one of the strongest, um, currency in the world because of their economy. Okay, they are like giants in the forex market. So whenever any of these major currencies, okay, they are the major currencies because their country is, apart from them being aside them being the most traded currency pairs, the economy of these countries are also very standard. Okay, they have a standard economy, and then that is why their currencies are the major currency. Okay, so for example, right now, Nigerian currency, which is the naira, is not part of the major currencies. So Nigerian naira is an exotic pair. Okay, it's an exotic currency because we are underdeveloped country. Okay, and we are underdeveloped country, so our currency pair is an exotic currency. So South Africa also, South Africa, yeah, their economy might be good, but they are still undeveloped country. Okay, compared to GBP, compared to Euro, compared to US, compared to Japan, New Zealand, okay, and so on. So um, so let me just do this. Okay, sorry. So now we have, okay. So now, as I was saying, we have the USD, which is our main point. Then we have Euro, GBP, JPY, CAD, NZD, CHF, and AUD. Yeah. So anytime the USD is paired with any of these foreign currency, they become a major pair. Okay, they become a major pair. So right now we have so take for example, let's say we have USD. So let's assume we have USD. Sorry, let's assume we have Euro USD right now. You see, the USD is associated with the Euro. Yeah. So this is a major pair. Okay. It's a major pair. Now, GBP, USD, Euro, USD, USD, CAD, NZD, USD, USD, CHF, AUD, USD. Okay. So all of these are major pairs. Okay, sorry, I made a mistake here. The USD comes first, right? USD, JPY. So the USD comes first here. Now Euro USD is a major pair. GBP USD is a major pair. USD JPY is a major pair. USD CAD is a major pair. NZD USD is a major pair. USD CHF is a major pair, and even AUD USD is a major pair. Okay, because they are paired against USD. Okay, so anytime any currency pair is associated with the USD, it becomes a major USD. Okay, and then let's do another thing. Let's make another example. Now this is the major pair. Okay, we also have the minor pairs. Okay, so aside the USD, let's remove the USD. Okay, and then when we remove the USD from our 8 major currencies, then we have 7 remaining. Yeah. So those 7 now, when they appear together, they become a minor pair. Okay. When they appear together, they become a minor pair. So let's assume Euro GBP. Euro GBP is paired together. Okay. So this is a minor pair. CAD JPY. That is Japanese yen against the Canadian dollar. So when they appear together like this, they become a minor pair. Okay. So this is CAD JPY, and then um, so look at this now. Um, so here we can also have Euro. Okay, Euro SZD. So you see, when they are paired against each other, they become a minor pair. Okay, so let's just list this out. Let's list those out. So here we have major pairs. Okay, major pairs. So you see here we have major pairs, and then these are examples of minor pairs. Okay, these are examples of minor pairs. and these are just major currency, major currencies. Okay, why are they major currencies? Because they are the currency of the top world countries. Okay, we have the major currency, we have the major pair, we have the minor pair, and then we have exotic pair. Okay, exotic pairs. Okay, exotic pairs. Exotic pairs. Okay, so let's continue. All right. So exotic pairs. Now the exotic pairs, pairs of, you know, pairs of undeveloped country paired against um countries like the US, the GBP, or the JPY. All right. Okay, so as I was saying, exotic pairs a pair of countries of an emerging country, okay, an undeveloped country, or rather underdeveloped country, okay. So countries like Nigeria right now is an underdeveloped country. So when they appear, associated with any of the major pair, then it becomes exotic pair. Okay, so for example, let's say we have the USD against the Nigerian naira. Okay, so this is an example of exotic pair. All right. So another example is, let's say um, we have euro paired against the Turkish lira. So that is also an example of an exotic pair. Okay. So the South African rand also is also an exotic pair, right? So okay, so guys, let's continue. Let's move on. All right. Okay. So now let's move on from the currency and so that we can do something fun. So we've talked about major currencies. We've talked about the base and quote currencies. We've talked about minor and exotic currencies. So now, as I've said earlier, I said in the forex world, there are people that you actually do this thing with. All right. So though it is done automatically online, it is not manual where you have to go to either a bookie or go to Bureau de Change to exchange your dollar. All right. So that is where the forex brokers come in. Okay. So a forex broker is a financial service company that provides traders access to a platform for buying and selling of foreign currencies. Okay, so they are like the intermediary between a buyer and a seller. Okay, so take for example right now, maybe you are selling, Okay, you want to sell a particular currency pair. All right. So when you are selling, there's another person that is buying as at that moment. Okay. So they are going to give your order to that person and then give the person's order to you. Okay, because you are buying and then the person is selling. All right. Forex trading is all about buying and selling. Yeah. So that is what the forex brokers do. Okay. Uh, all right. So that is that on forex brokers. All right. Now in forex trading, we have what we call a pip. Okay, a pip. Let me write that out so that you guys can get um, so that you can get the spelling. Okay, let me just remove all of this. Let me remove all of this. So let's remove all of this. So now, what is a pip? I give up. What is a pip? Right. So a pip means price in points or percentage in price. Okay, a point in price or percentage in point. That is what a pip is. But before you can actually understand what a pip is, you need to understand um, you know, you need to understand you need to understand bid price and ask price. Okay, before you can understand what a pip is, because the pip is the movement of the market. Okay, so take for example right now, we have our time where we say the time moves in seconds. Yeah. So 30 minutes, 60 minutes or 60 seconds make 1 hour. Sorry, 60 seconds make 1 minute, then 60 minutes make 1 hour. Yeah. So it's the same thing in the forex market. Okay. So the forex moves in pips. All right. We have pip, then we have point. Okay. So 10 points make 1 pip. All right. So let's assume if we have something like this, let's say we have 1.2345 6, right? So let's assume we have numbers like this. So the fourth digit here is our pip. Okay, the fourth digit after the decimal point is our pip. All right, this is the easiest way to get your pips. All right, so what is the fourth digit after the decimal point? We have 1 point, then the first digit after the point is 2, the second digit is 3, the third digit is 4, and then the fourth digit is 5. So 5 here is our pips. Okay, and then the 6, which is the last digit, is our point. Okay. um yeah, excuse me guys. Okay. So this is how it is for all currency pairs aside the JPY pairs. Okay, JPY pairs. So any pair associated with the JPY is different. Okay, so let's say USD JPY or Euro JPY. Okay, so those currencies that are associated with the JPY, they are different. Okay, so the JPY pairs will always have something like this, different from the way I've shown you just now. So 3, then 3, 4, 5. Okay, so you see they are quite different. You see the difference? So on the other currencies, okay, on the other currencies, the fourth digit after the decimal point is the pips. Yeah, but in this case, in the case of JPY associated currencies associated with the JPY, okay, any currency where the JPY is associated, any currency that the JPY is associated with, this is how their market looks like. Okay, this is how they looks like. So and here the second digit after the decimal point is the pips. Okay, you see there's no so much difference here. We have 123.456. Okay, so 5 here is our pips. All right, 5 here is our pip because the second digit after the 123, the second digit after the decimal point is 4 is 1, then 2 is 5 is second. Okay, so 5 here is our pip. All right, so this is how to calculate pips in the forex market. All right, so when this moves right now, let's assume that this is how we met it. Okay, 1.2345 and 5 is our pip. So let's now assume that the 5 moves. Okay, the 5 moves change to 6. Okay, so you see it was previously 5, but now it is 6. Okay, so what this means is that the market has moved 1 pip up. All right, the market has moved 1 pip up. Okay, so then we have spread. Okay, so as I've said earlier, I said we can't talk about pip without mentioning the bid and ask price. Okay, so right now that we want to talk about spread, we need the bid and the ask price. Now, what is the bid and ask price in the forex market? So the bid and ask price is this. Okay, just as the name implies, the bid price and then the ask price. Okay, the price they are putting out and the price you are buying it from. Okay, so in the forex market you always see, two lines. Okay, so you might not be able to see this clearly. Okay, but there are two lines following each other here. So let me use the cursor, but cursor. So we have two lines. We have one above, then we have the other one below. Okay, if you can see this clearly, there are two lines here. The first one is red, which is the one above. Then we have the blue, which is below. So the red is the bid price. The bid price is always at the top, while the ask price is always below. All right, and then so that is just okay because they are the ones. When the market is moving, the bid price and the ask price are the ones actually moving to the upside. Okay, and they move in pips. Okay, so no, I'm talking about bid price and ask price. We have what we call spread. Okay, and then spread is the difference between the bid price and the ask price. All right, and then it can also be like a commission that the brokers take in order for them to place your trade. Okay, so the difference is the gap between them. You see, we have a bid price and then we have the ask price. So there's always a gap in between. So that gap is like a commission that the forex brokers take in order for them to place your trade. Okay, so it is the difference between the bid price and the ask price. So that is why you see sometimes when you place trade, immediately you place it, the market hasn't moved, but you start losing maybe like $1 instantly. Okay, but that is one of the beautiful things about BtcDana. Okay, because on BtcDana they have zero spread. That is why when you open position, it starts from where you opened it. All right, you don't open with 0.01 and then it jump to -1 instantly. It doesn't happen like that in BtcDana. Okay, so that is it for spread. Now we have what we call leverage in forex trading. Okay, so now again we can't talk about leverage without talking about margin. So let me just write that out so that we can see it better clearly. All right, um, leverage leverage of 1 is to 500. Then we have margin, okay, which is 1. So now, so what this means is leverage in the forex trading On the norms, we are not supposed to be able to trade the forex market with $10, with $100, not even with $1,000. Okay, so the forex was, the earlier people that were able to trade the forex market when the forex market was just introduced are the big boys in the forex world. Okay, the big companies, financial institutions like the big banks, CBN, and top countries. All right, because the money needed, the fund needed to actually trade the forex market was ranging between $100,000 to like millions of dollars. Okay, so if you are having below $100,000, you are not able to trade the forex market. So that was, then the brokers came in with an idea of leverage. Okay, so now what does leverage mean is, here you see I have a leverage of 1:500. So what this means is that, this is the leverage. The reason why I'm making this example is this is the leverage BtcDana offers. All right, this is the leverage they offer, and 1:500 means that whatever you are funding in your account is your 1%. Okay, which is your margin. All right, that is why I said you can't talk about leverage without talking about margin. Okay, so if you have a leverage, there will always be one is to the leverage. Okay, so this one mean your margin, which is the amount you are funding in your account, and the leverage means the amount they are going to be magnifying your account to. Okay, so we haven't actually defined leverage. Leverage is like, um you know so leverage in forex is when your broker allow you to control a large forex position with a small deposit. Okay, and then it is represented in form of a ratio, just like I've shown you guys. Okay, so the leverage is not a physical money, or it's not something that you are going to be seeing physically. All right. So let's assume you have like $1,000 in your account right now. Then the company is giving you a leverage of 500. What this means is that your 1% will be magnified into 500 places. Okay. So the Forex Institute is going to be looking at your money like as if you have 500,000. All right. All right. Okay. Okay. So thanks for asking this question. How can we calculate our risk to reward ratio? Okay. Let me just pause this for a bit and then talk about the risk to reward ratio. Okay, if you want to calculate risk to reward ratio, it depends on your stop loss and your um take profit. Okay, my risk to reward ratio is always 1:3. Okay, 1:3. Now if you want to calculate this, you want to this is just a simple arithmetic that need just common sense. All right, so what this mean is that if you want to calculate your risk to reward ratio, first of all you want to make sure that you are taking an entry from um sorry, just a moment guys. So now we all know risk to reward ratio is a way to actually manage your risk. Okay, so how I manage my risk is, if you want to calculate your risk to reward ratio, the first thing you have to put into consideration is your stop loss. Okay, because that is the one of the most important thing for a forex trader. So if you want to calculate your risk to reward ratio, now what you have to do is just make sure that your what I do is I make sure that my stop loss is very small. Okay, and then I make sure that my reward is higher. Okay, so if you are using risk to reward ratio of 1:3, what that means is that um, you are risking 1% to make 3%. Okay. So, and then if you are using, you know, trading view like this for analysis, then you can easily use this tool. Okay. You can easily use this tool for to get your trade, to get your risk to reward ratio. Okay. So look at this right now. You see, my risk to reward here is 4.13. That means I'm risking 1% to make 4.13. All right. So generally, to calculate your risk to reward ratio, just make sure you are taking a trade from, like a sniper entry. Okay, you want to take it from where the market is actually rejecting from. Okay, so that way your risk is very little, and then your reward is very high. Okay, that is all I can say about risk to reward ratio. Thank you. So now let's continue with our class. So we are still talking about leverage, yeah. So as I was saying, we are not supposed to be able to trade the forex market with $100. All right. But with the intervention of the forex brokers, they made everything easy. Okay. So when a forex company is offering you a leverage of 1:500, what it simply means is that this 1% in front of it is your margin. Okay, that is the amount you are putting down. Okay, the security money you are putting down, that is the amount you are funding in your account. All right. And then the 500 is the leverage they are giving you. So that means they are going to be magnifying your account by 500 times. Okay, so if you have 1,000, that is 1,000 times 500, that is $500,000. All right. So the $500,000 is not something that you are going to be seeing physically. Okay, but it is just a way of them telling the forex institute that yes, this person is okay to trade this pairs. All right. So I hope you guys um, you understand the scope. All right. So now let's continue. Let's continue. Then we have profits and loss. All right. How do you know if you are gaining or making a loss in forex? So don't worry, I'll have to show you that in the forex chart. On the. So let me just see if I can get my chart running, and then I can show you um how it looks. Okay. Okay. So my chart is coming up. So before that happens, before my chart comes up, let's talk about lot sizes. Okay. So I'm also going to be showing you lot size using the app. Okay, because there's no way I can actually make examples here. Though I want to show you how it looks like, and how you can actually put everything into practice. Okay, in case you want to start trying it after this lesson, which I personally recommend. Okay, so it's still coming up. All right, so let's continue, guys. So here, okay, so let's just wait for the chart to come up, for my BtcDana application to come up, and then I can show you how, um, you know, how you can use lot sizes. Okay, my app is still coming up. Okay, it's coming up. So I want to quickly show you guys. So I want to quickly show you guys what that looks like on the app itself. Okay. Okay. So my app is up. Let me show you. Let me quickly show you. Let me quickly show you. Okay. So now you can see the app. All right. So this is the home screen of the app. Um, now let's go to the market and choose any pair. All right. So first off, how do you know if you are making profit or loss in any forex market? So this is how you know if you are making a profit or a loss. All right. So let's just this market is okay. It's giving a it's showing us a red, which means the market is going to come down. So let's sell. Okay. And now you see when I click on sell, it brought out these options for me. This is lot size. All right. So let me explain lot size in a layman way. So lot size is, like the quantity you want to buy. Okay, the quantity you want to buy. So let's assume you want to buy a pen right now. Let's say each pen is sold for 15 naira. Okay, so if you are buying one, you know you are spending just 15 naira. But if you are going to be buying like 10, you see how much you are going to be spending. Yeah. So that is also that is what the volume means. All right. So if you are buying this, the lowest is 0.01. If you increase it, it's going to be double. Okay. This is triple right now. So this is 0.01. This is 0.1. Okay. So 10 of these equals to this. All right. That is why I always advise the beginners, don't make a mistake of using 0.1. Okay. Always use 0.01. Okay. In fact, if you have less than $50 in your account, use 0.01. Don't ever make the mistake of using 0.1. All right. And then, so now let's place our trade. So we are selling. This is the demo account. Okay. Then let's also buy. Okay. So our orders are successful. So let's check our orders. You see, right now everything is showing red. Okay. So this is a losing trade right now. Okay. So look at this one. This is GBP JPY, and you see, we are already losing 2.64. Okay. So this is a losing trade. This is how you know you are making a loss. Okay. And then when you are seeing green, that is a profit. Okay. So as a forex trader, you want to see profit. You want to see greens, not red. All right. So if you are seeing red, then that means the market is going into loss. All right. So guys, um, That is just introduction to the forex market. So tomorrow I'll be introducing you guys to the forex chart, where we are going to be, you know, making analysis and then showing how to actually place trade in the chart. All right. So guys, that is it. Okay, that is all about introduction to the forex market. So if you have any question that you want to ask me, I think I've given you guys, time to ask me question, because earlier I said if you have any question, you can just post me and ask the question. Okay. So I don't like going back to answer questions. I love it when I make explanation and you don't understand what I've just explained. You post me and then you ask your question. So since you guys haven't asked any question, then I'm guessing that you understand everything that I've been explaining right from the beginning. All right. So guys, we are going to be stopping here for this evening. Tomorrow afternoon we have a session coming around. Our regular 2 p.m. session where we analyze the trade together and possibly place order. All right. So I'll see you guys again tomorrow. Have a good night's sleep. See you guys tomorrow. Bye for now.